This stock currently looks to be one of the most undervalued within the US markets, and not only this, but it's also part of the Mag 7. Can you guess what it is? Well, it is of course Meta.
They're going to grow earnings at 20%, operating margins at 40%, but they have the best moat, 3.3 billion daily average users across all of their businesses, and they're monetizing AI. They're one of the only Mag 7 that really is.
In this video, we're going to be going over Meta's current market valuation. We're going to be looking at potential growth prospects as well as potential risks, and why Meta might just be the most compelling stock for your American portfolio. So founded in 2004 and rebranded to Meta Platforms in 2021 to reflect its focus on the metaverse, with Meta's core platforms being of course Facebook, Instagram, WhatsApp, Messenger, and now Threads. And just on the topic of Threads, I would like to know your guys' opinion as to whether you think this was a successful business venture for Meta. In my opinion, I don't think Threads has been that successful at all, especially when you compare it to the usability of applications like X. I just think the majority of people don't really want to move over to Threads, even though they are current Instagram users. But back to the topic at hand here, we can see that they primarily generate their revenue through advertising, accounting for approximately 97% of their total revenue in 2023. So what is the market snapshot for Meta currently? Well, on a day chart, they are well into a short position on the MACD indicator, and they are seeming to bounce off in between these two support boundaries here. They are below all but one moving average, with them just barely being above the 20-day moving average here. But again, this isn't actually that bullish for them. It could actually show that there is a potential for a reversal. We have seen them jump up quite significantly in the last couple of weeks, but overall in the last couple of months, they are definitely down, and the trend is definitely against them. On a 15-minute chart, they are seeming to do relatively well. They are above all of the exponential moving averages, and they are in a long position on the MACD, indicating that we could potentially see Meta do quite well in the next coming of weeks. But again, it really depends on macroeconomic factors and political factors in the general US markets at the moment. Even though Meta won't necessarily see repercussions primarily from tariffs, it's still going to see a broad sell-off just due to ETFs being sold off. So looking at Meta on Yahoo Finance here, we can see they are currently only at a PE of 22, which for a Mag 7 stock, that is just incredibly low. They do also pay a very small dividend yield of 0.39, and on the analysis tab here we can see that analysts are recommending this at a general buy to strong buy, and we'll get onto where I rate this later on in the video. They are quite often beating their surprise rate here, with them beating the analysts' estimates essentially, and we can see here over the next year they are projected to grow a further 14.64% over the previous year. So what do the financials for this company look like? Well, they do look really impressive. At the top of the screen here, you can see the mean on their retention rate is all the way up at 37%, which indicates that this company is doing absolutely amazing on a retention basis. Of course, that is to be expected, as their primary source of revenue is, of course, advertising, and there isn't really many costs to advertising, especially when you're the advertiser. There are obviously a lot of costs within the R&D department for Meta, especially as they're trying to develop AI tools, and they're always developing their applications. But when you compare that to revenue, it's still doing absolutely fine. When we look on a liquidity basis here, we can see that they are doing absolutely fine as well, with the mean coming out at 1.57, which indicates that for every dollar of debt in which this company owes, they have $1.57 of liquid cash to pay this back in. And on a free cash flow basis here, we can see the mean is relatively good. It's in the positive, which is of course good, which you should expect for a Mag 7 stock. It is a bit volatile, but I think generally it's okay. There isn't a specific trend here, but it is doing relatively decent. On a 365-day exponential chart here, we can see that it is correlating very nicely with the volume. We are obviously below where the exponential moving average is, which could indicate that we might start to pull back up to this relatively soon. Maybe so, or maybe it will just continue to push it down. But when we see the volume correlate this nicely, we could possibly expect to see this climb back up. But again, this is mostly down to geopolitical factors at this point. And of course, there are many factors which are leading into this current sell-off, even though the price is currently going up, which we will get onto later on in this video. So on a probability theory, we can see here the probability of a positive day over the last year has been at 54%, and the probability of a negative day is all the way down at 25%, which indicates that this stock does look to be on the bullish side overall. And on a 91-day basis, we have obviously seen this price fall down. The volume hasn't actually correlated as well as we would expect, but that could indicate that this could actually potentially have more buying pressure still yet to come in the next coming months. Okay, so now looking at the intrinsic valuation for this stock, we can see that this is where this stock looks to be a bit more tasty. For example, on the left bullish indicator here, I have an intrinsic value set at $917 with a margin of safety of 25%. This gives you an acceptable buy price at $688. With the current price being at $541 on the left here, it's definitely a buy. If we look on the bearish indicator here on the right, we can see the intrinsic value is set at $519, which is just below where we currently are with a margin of safety. This moves down to $389, which indicates that this is a sell. If we go in between the two of these here, we get an intrinsic valuation of $718 and an acceptable buy price of $539. So this stock does look to be fairly too undervalued at this rate. It's something in which could definitely go up by around 20% if the factors in which are going to push this stock continue to push it in the next coming months, but that is very dependent, of course. But this only just gets backed up by Peter Lynch's valuation here, where we can see that this stock is ranking in at a fairly valued. On a free cash flow basis here, we can see that this stock doesn't look to be as undervalued as I mentioned before. It is quite volatile with it not actually having a projected growth. It's very choppy. We can see here on a 9-year basis, this stock should only be worth $1,332 per share. In 3 years' time, this should be worth $444, and this year it should only be worth $148. With the current price, of course, being at $140, this stock does look to be relatively overvalued on a free cash flow basis. So as of recording this, Meta is ranked at 89th on my breakout indicator out of 109 stocks, which obviously doesn't look too particularly good at this current time. They have a breakout score of 2.49, indicating that they are just not really a stock that might have momentum today at least. Potentially next week, maybe they will, but that's hard to tell with the current state of the US markets. And on a 5-day chart here, we can see that they are basically yielding the same results. They are actually ranked in 96th here. So with this recent Facebook analysis or Meta analysis, I am putting them in at a buy despite them being below their discounted free cash flow. I think they are between a buy and a hold. I think this stock could potentially see a rebound in the next coming years. And here we can see that they are actually doing relatively well, with their intrinsic valuation only climbing up since I previously did their analysis. However, it's not actually climbed up that much, so I would have liked to see this climb up a bit more. So what are the potential growth drivers for Meta going forward? Well, AI is definitely one of them. This enhancing ad targeting, content recommendations, and user experience is always going to drive up their revenue. There is, of course, the fact that Meta is starting to turn to WhatsApp, which has over 2.8 billion users globally, into a revenue-generating machine through many streams. For example, they are starting a business messaging service, which allows customers and businesses to send order confirmations to each other, provide business and customer support, offer product catalogs, automate responses using chatbots, and many, many more, of course. And there is, of course, I've said of course a lot here, but there is WhatsApp payments being introduced in countries like India and Brazil. WhatsApp now supports peer-to-peer and business payments. Small businesses and medium businesses love WhatsApp as they use it already daily. In places where credit cards and formal online stores aren't the norm, WhatsApp can become a mini e-commerce platform. Meta has barely scratched the surface of monetizing its billions of users on WhatsApp, and analysts think this could turn it into a multi-billion-dollar revenue generator. And then there is their metaverse development, long-term investments in virtual and augmented reality through Reality Labs. So what is the metaverse and what is the purpose of Reality Labs? Well, they are trying to build a future tech lab, which is basically showcasing what the future might look like in 5 to 10 years from now. How much are they spending on this investment? Well, they're going all in. In 2024 alone, they lost over $17 billion in Reality Labs, with Meta and Reality Labs cumulatively pouring in over $50 billion into this project. This is quite an insane commitment, and it does have a lot of investors wondering if it is actually something in which is worth their money. But again, other people do think this is a long-term game for Meta, as in the future this is just going to be absolutely massive, but it's really hard to say at this time. With Meta building their Meta Quest headsets as well, I don't know what's happened to this website, but it seems to be that they've redacted all of the images for some reason. With the Quest 3 being their recent VR device built for gaming, socializing, and even work, think of it of an early version of the Apple Vision Pro, but much cheaper, as you can see here, at £289 and more accessible. And then, of course, Meta is partnering with Ray-Bans to create stylish AR glasses, in which could potentially be a massive growth and revenue driver for Meta going forward, especially within the next 5 years as AR becomes more accessible. I mean, when you look at these here, they are just massively bulky. Nobody would want to wear them, but of course, battery life limitations and, well, what would be some sort of heads-up display limitation. They're obviously going to be very chunky with current development, but within the next 5 years, this could definitely be something in which will be absolutely massive for them. With these already being out on the market, but I will be perfectly honest with you, who on earth is going to wear these? They are absolutely hideous, but in my opinion, they are much better looking than the Apple Vision Pro, which at least these you could just say that you just have bad taste in glasses. With the Apple Vision Pro, you just look like a bit of a bean. So it is clear to see that they are definitely growing, and they are basically positioning themselves into a really strong position for the future of artificial intelligence, AR and VR, but there are definitely some risks and criticisms when you account these future product pipelines and really think about how useful they are. For example, the Reality Labs is burning their cash with no profits yet. The metaverse is definitely not something in which is mainstream, and some see it as a solution for a non-existent problem. They have big competitors like Apple and Microsoft building similar products. And investors are definitely concerned with Meta's drive for this futuristic world when they should really be focusing on what is here and now. With that being said, there are definitely signs that Meta is probably positioning themselves away from this metaverse world, with them recently laying off loads of Reality Labs employees, which on paper might look like a negative thing, but it could actually indicate that this company is now moving away from this almost failed idea, and they're going to position themselves on, like I said, what is here and now, but they're going to keep this option open as a slow burner for the future in case it does potentially become something big. But right now, as we've just seen with those absolutely horrid glasses, the world is not there right now. There is, of course, a lawsuit against Meta currently, with Meta being under intense scrutiny globally for its data privacy practices. Laws like GDPR, General Data Protection Regulation in Europe, and CCPA, California Consumer Privacy Act in the US, basically go against Meta's previous practices. This definitely adds a layer of risk to Meta, as it could introduce fines, restrictions, or changes to how they monetize user data through their advertisements, which could, of course, hurt their revenue model. For example, Meta has faced multiple multi-billion-dollar fines. In 2019, they paid $5 billion to the FTC. And there is, of course, antitrust scrutiny against Meta currently, with Meta facing antitrust investigations related to its dominance in the social media market, especially regarding the acquisition of Instagram and WhatsApp. This holds a potential risk as it forces diversification of this company away, basically meaning they won't no longer have such a monopoly on their market. And again, the FTC has attempted to block Meta's acquisition of certain companies on anti-competitive grounds in the past. And there is, of course, a strong dependence on advertising for Meta's revenue, which is not something in which is ideal, especially as if your revenue model is 97% based on one thing. If you have a hiccup within that, for example, advertisers stop paying companies like Meta for whatever reason, they are obviously going to see a negative impact from that, and quite a significant one. And if Meta are forced to basically give up such a monopoly on their advertising or their way of giving users their advertisement, then their advertisements will no longer be as targeted, therefore reducing revenue anyway. And finally, there is the user base decline, which is currently occurring throughout Meta as aging user bases basically push people away from this. Basically, more people, the younger generations, are going to TikTok, especially people Gen Z and Gen Alpha. Nobody really likes to use Facebook, as there's a bit of a meme with Facebook mums. Nobody thinks of Facebook as a young person's application anymore. It's just for the older generations to basically communicate, or in my case, to stalk Facebook Marketplace. This could definitely pose a risk to Meta, but I do think they are countering this with the likes of Instagram, as that is still relatively popular. That's definitely something in which younger generations are definitely using more often, if not sometimes more than TikTok now, as some people are actually moving off of the application of TikTok. So is Meta currently a buy? Well, according to 66 analysts, the general consensus is that Meta is a strong buy at the moment, with a price target being set at $935 on the high side and $448 on the low side. And for me, I think it's fair to say that this stock does look to be a buy at the moment, especially when the intrinsic valuation shows results like that. And when analysts are putting this at a strong buy based off of 66, I think it's fair to say Meta definitely looks to be a stock worth buying currently. But that doesn't mean to say that this stock doesn't have its own risks, as I have discussed in this video. So with that being said, I am going to end this video here. I hope you have enjoyed it. Again, I'm not a financial advisor. None of this is financial advice. This is just my own unbiased opinion, as I've shown you the positives and negatives of this stock. So I hope you have enjoyed this video, and I'll see you for the next one.